Hi, the Reits market is the eighth month of the current tremendous, huge sell-off. As we inch towards the 10th month of sell-off, which was the longest ever in Reits' 20th history, it is not surprising that skeptics as well as previous pessimists are turning slightly positive that maybe an end is near. In today's video, in this week's video, we are going to examine how did the previous sell-off from 2018 born some good lessons for us as REIT investors where you should stay sharp and smart with GCP Global. So once again, do like and subscribe to our video and enjoy this week's video. So Gabriel, tell us what metrics should one use when you actually look at 2018 versus the current sell-off. Thus, the indications that the how those indicators actually react during the 2018 sell-off bore a very good resemblance to the current sell-off. As you can see from this current chart, the DPU yield of REITs now has reached 8.1%. Now, never has in the REIT 20th history have actually reached DPU yield reached such a high level that is above 8%. Of course, the highest yield in which we saw was during the sell-off in the global financial crisis in the apps in September and October of 2008, where you saw DPUs exceeded more than 10%. Right now at 8.2%, where does it stand? It is actually a full 1 percentage points above the last sell-off in a normal corrective reaction, where you saw interest rates also increase in the last rate interest cycle between 2015 and 2018. So in terms of essentially DPU, you are seeing that we are already 1 percentage point above the last sell-off. And where do we stand now in terms of the 10-year bond yield? Now, in the last sell-off, the 10-year bond yield, the highest which was 2.6%. Right now, we are almost a full 90 basis points above that level. That is at 3.5%. Of course, skeptics may say that, hey, the Federal Reserve statement does indicate that terminal yield will be a little bit higher, a little bit longer than what was originally expected. So if it's at 4%, which is actually the 10-year bond yield in the US is actually forecasting, we still may have a little bit room more to go. Why should investors not be surprised, Gabriel? I mean, considering the fact this has been one of the worst sell-off, and this is what GCP Global has been guiding your investors. Hey, look at this chart, ladies and gentlemen. This is the again the progression of the difference between the DPU yield that REITs are actually earning for investors versus a 10-year bond yield. And what do we actually have? Actually, we are reaching almost similar levels that we saw in the climax of the 2018 sell-off. In the climax of 2018 sell-off, the yield spread, that is actually the 10-year DPU yield versus the 10-year bond yield for REIT investors was the maximum was 4.58%. And guess what? We are at the cusp of hitting a similar level. Yes, 4.5%. Is it coincidental? Well, if you actually study the figures closely as what we do at GCP Global, you will not be surprised. Why should investors not be surprised, Gabriel? I mean, considering the fact this has been one of the worst sell-off, and this is what GCP Global has been guiding your investors. Remember last week video, we actually showed you the 6 metrics for which we were interviewed by the Business Times last month on actually how to gauge REITs actually when they report the quarter results so that you will avoid the bad apples and the rotten apples. Well, it's listed here. So it's the same case, ladies and gentlemen. In today's video, we present you three objective dynamics in addition to the 6 metrics that we actually use. So this is exactly what we use when we actually analyze the key facts, the key data, when we actually are interviewed for about last month or the previous month in October for Business Times, as well as in all our investment classes. Oh, yes, that's right, Gabriel. In fact, you also told us about experience, knowledge, and flair, which was actually one of the best things that you have actually presented in last week's video. That's right. As you can see, from this book, it requires experience, it requires knowledge, and it requires flair for you to profit from a downtrodden market like this. As this book actually clearly states, all right, knowledge born from experience helps ones to profit substantially. But what is actually required also is flair, and flair is the ability to actually amalgamate your knowledge with your experience to take sizable positions when market is downtrodden like what it is. So in our 33 years experience at GCP Global, teaching and experiencing the markets firsthand as first one of the youngest head of research in Singapore brokerage history, that was me way back in 27 years old when I actually was head of research at Nico Securities, as well as before I went on to actually to work in Wall Street, and before I went to head the broking arms of basically a couple of institutional sales rather in a couple of broking houses. So systematically, what we have been using is no dissimilar to what we've been doing and practicing for the last 33 years. So Gabriel, give us an example of knowledge, experience, and flair in the S-REITs market that you have actually seen. See, ladies and gentlemen, this slide shows the 10 worst REITs that performed during the 2018 sell-off. You can see that in the middle of the pack, it's basically two names, Manulife REIT and Cromwell REIT. Fast forward 4 years later, this is the next slide. This is the worst five performing REITs in this current correction. In it, you can see the worst is actually Digital Core, for which in our previous videos we have experienced stay out, make sure that you avoid this particular REIT. In it also you see prime REIT, which we told you to stay out. Office REITs are value traps, and guess what? The two names that we mentioned in the 2018 sell-off is Cromwell and Manulife REIT. Now, is it a case where a leopard doesn't change his spot? Is it coincidental, or is it really down to knowledge, experience, and flair? So once again, I leave you to decide, ladies and gentlemen. Do join us for our next upcoming class on 26th November in Orchard, Mandarin, Singapore, where we will share with you the right knowledge, the right experience, so that you have the flair to invest profitability in its current sell-off. Do actually sign up before the 15th of November to enjoy the early bird special. Once again, see you next week for our next interesting read video. Do actually smash and subscribe button and join us every week for our reads video to keep you fully experienced with this current experience, the right knowledge, and the flair to help you to make money